Well, good morning, everybody, and Happy New Year's. So, I want to run through a real quick 5 stocks that I'm watching this week and give you some commentary and the reason why. So, what I'm going to do here is I'm going to start with Tesla. We're going to take a look at this one where I think there's potentially a little bit of a pullback. You'll see that we've had a good trajectory on the way up, and we are kind of testing this overall trend line on a multi-day time frame basis. So we had some really good consolidation here. We moved up. We're touching the trend line. What we're going to want to watch is, will this bounce higher or will we break below? My take is we'll probably break below and start to come back to where it was consolidating right around this 230 level. What I do want to do is I want to take a look at one of the indicators, the overall supply and demand, so we can take a peek at what is going on with buyers and sellers. So red are going to be your sellers, green are going to be your buyers. You can see here, and let me zoom in a little bit, that we do have some minimal supply forming, but it's very narrow in nature. And then there is quite a drop below until we start to come down into this 236, 230 level. So what I would do is, if you're going to get short the stock, I would probably look at, just based upon the cost of the contracts, to look at maybe the 240 puts or the 235 puts in Tesla. But don't know that there's enough momentum or a catalyst to push this higher, but wait for the break below the trend line and then definitely get short back down here to 230, 235. So if you want an early entry, maybe a 240, but I think it would just pay to wait and be patient for the trend line to break and then watch it drop lower. The next one that I want to take a look at is Disney. There's been a lot of activist interest in the stock and the overall board seat. So you can see that we have a gap below that I already drew on the chart here, where the question will become is, does it fail? So when we take a look at the indicators, we do have some good support here, right around $90 a share. This actually goes back in time, all the way back here to March of 2023. We were able to bounce off of that. We were able to bounce off of it, but it's now starting to look like it potentially could become resistance. So if we break through the $90 level, I definitely think that we're going to be headed lower to 89. The next stop will be 88. And then where we have really good support is probably down here at $87. Don't think that it's probably a opportunity to go long here. So I would watch and see what the overall strength of the market is doing. And if it's weak, I would look to buy puts in Disney, probably somewhere between the $85 and $87 level, thinking that we might have an opportunity to actually get a gap fill. So that's what we would want to play, going short down to about $87, and then we'll watch and see, does this gap fill? If so, you'll want to go down to 85. But definitely had a nice bounce off of earnings back here, and it has since then started to really struggle. I do want to take a look real quick at a fib level on this one, just so we can see where we're at. Everything kind of lines up accordingly, where a 50% retracement would be about $87. So that would be target number one. You can see that the 618 is literally in the middle of the gap section. So that would be target two, and then target three would be all the way down to the 786 fib, $82. So if you're going to go short, those are your targets: 87, 87, 85, 83, 82, 93. Okay. Let's go ahead and take a look at another one that had a lot of good momentum, but potentially another gap fill is going to be Palantir. So I already have the fib levels on this from a pivot low to a pivot high. We couldn't hold the 50% retracement. We're failing the 618. So the next stop, I think, is going to be somewhere down here at $16 a share. Let me go ahead and clear out this fib level so you can get a better view. But you'll note that off of earnings, there is an incredible gap down here, all the way down to ballpark about $15 a share. So you can see that we've already started to enter the gap. We've bounced again. We are starting to fail the gap. Gaps act as magnets, and they typically fill 80 to 90% of the time. Several weeks ago, I put out an alert that you would want to look to maybe go long on this up to $21 a share, and we actually got almost up to 22. But since it has been failing, it's tried to recover, it's failing again, I think we're going to probably go lower. So if tech is starting to struggle, i.e. the QQQs, Apple, Amazon, Google, Microsoft, this would be a great short to the downside. So what would I look for? Price target? Probably the $15 or 16. Start with 16, and then you could go down to 15. I think 15 is just going to be too far out of the money. But as you know, with Palantir, once you get some momentum, it can really drop. The next one that I want to look at that was an earnings miss is going to be Nike. Nike is another one where I think we have some more potential to the downside. So they missed earnings, they gave really poor guidance, and you could see that we have this huge drop from the high all the way to the low. It was Nike's worst drop, I believe, in over 30 years. So we're trying to kind of consolidate here, move higher. I think the move higher is going to probably fail. We are on a daily chart, so I'm going to just do the ultimate pivot low to the pivot high. Where do I think Nike is probably a buy? Not here at 108. I think it's going to fail the 105 down into 101, and then a great buy area would be 96. So I think you could still stay short this. I really don't see a catalyst as to why this thing would move higher when the markets are trading already at all-time highs, and it clearly disappointed in the consumer discretionary space. And then the next one I want to take a look at is going to be JP Morgan. The bank stocks have been crazy running hot. So what do I want to watch for this? Well, I want to go back to JP Morgan's prior high, which was back here in October of 2021, right around 172, 173. As we approach this, I think this is a great opportunity for a short. Its prior pivot high was at just shy of 160. So what I would do is I would wait and see as to how is the market going to respond over the next 1 to 2 days, maybe this week. Bank earnings will be coming out in just a couple of weeks, and I really don't think that they are going to surprise to the upside. I mean, when you look at how the bank stocks have literally gone in a straight line up with no pullback and no consolidation, I think the market's getting ahead of itself, but that's just my take. So if I was going to get short this, I would wait for it to get up to the 172 level, and then I would probably look to go to the 160 puts, and I would buy that put right after the earnings announcement is, and use earnings as a catalyst to the downside. I can't imagine that this stock is going to go to 180 or 190, but again, you never know. So those are the things that I'm actually watching this week. Just be careful as the markets are approaching all-time highs. We need to have a little bit of a consolidation and a pullback. But with that, hopefully this gives you something to consider as we move into 2024, which I think is going to be full of insane volatility, which will really make your opportunity to capitalize on options very worthwhile. If there's anything I can do, feel free, DM me, reach out, shoot me an email, contact me on LinkedIn. But with that, appreciate the following and have a fantastic trading week, and welcome to 2024. We'll talk to you all next week. Take care.